Well, good afternoon, everybody. For most of us, at least a good half of the country, how's everybody doing? Welcome to Market Minds. I'm Mike Shorr, and I'm here with my dear friend, Mr. Charles Moon. We are covering for our other good friend, Scott Bauer, our CEO. So what do we got today? So I think we saw some of the softening that happened between Mexico and China on the tariff front. That combined with a favorable JOLTS report that really sent us up. And then at about 11:15 here, Chicago time, we were just kind of hanging out. And then we got some news that President Trump and Xi from China were not going to meet today. They were scheduled to have a phone call today, and the market got spooked from that. And we are trying to edge our way back. We're about, halfway, 2/3 of the way between where we were and where we are now. So that's that's just kind of the encapsulation of this morning. And I think we wanted to do two things today. I think we wanted to take a look at AMD and Google earnings, who both report after the close today. And then we were just going to do a rapid fire on folks, any questions that you have. Did I miss anything, Charlie?
No, that's about it. A pretty wild day yesterday, but finished down across the board. What a comeback by the Dow.
Yeah.
Today, it's kind of really the visual representation of recovery, but it's a weird dynamic, right? You can see the VIX contract. It says it's down 8.5%, but the VIX futures contract is down 3 cents.
Yeah.
Ethereum is strong today. Bitcoin is weak. Cats and dogs are living together. It's just a weird time. And this is kind of what we've seen from last week really starting to become very prominent, is that it's becoming a more difficult environment for anybody outside of the day trading realm. This is really good for day traders, right?
Yeah.
Hard swings. I believe was it yesterday, Mike, that you had bought the Qs at the lows, and then it was like
that was
all the way up to the highs.
That was a monster. It's been a little bit tougher to figure out.
This is kind of the environment that we're going to be trading in. On the heels of Palantir earnings, I'm assuming that there's going to be a lot of interest for these two small companies known as Alphabet and AMD. So, Mike, I don't know. Do you have a preference on what you want to talk about first? I'd say we take one company each.
Let's go in alphabetical order. Last time I checked, A is before G.
Is that Alphabet then? That is Alphabet.
Well, I was going by stock symbol.
Oh, okay. Okay, so AMD. How about I start with AMD? Okay.
Sure.
First and foremost, the chart looks terrible. We've had this discussion. There's a bit of a positive sign, I guess better late than never, that some of the shorts are starting to cover in the stock. We've seen AMD try to defend their lows previously, but they've always had kind of a bit of a weakness into that level. This was pretty well defined yesterday, that 1280 is the low. Yesterday's low was at 1298. I'm not convinced that they're going to have a good report, but they're teed up to have a really strong response if they do.
Yeah.
We talk about, especially, quality names. It's funny. They're looking at these numbers. They're looking in comparing Palantir and AMD and how their numbers and their metrics stand up together. And it actually is that AMD is it just provides overall greater numbers, especially from the revenue side. And yet Palantir is screaming to the upside, and AMD is getting broken down every single day. But, if AMD actually does surprise the markets, the question is, what are they going to do when they start moving up? And I think what's really key is that we have seen stocks respect the daily chart levels, especially something like the 50-day moving average or the 200-day moving average after hours. So, right now AMD is projecting around a $10 move, maybe even 11 if you want to stretch it. And that would actually put them in a position to leap above this 50 SMA. Now, for me, if it's a really exuberant response, the 132 would be the upside target, and anything beyond that level opens the door for a march towards the 200-day moving average. I'm not saying that AMD is going to do this, but AMD is a company that's familiar enough, that's respected and beloved enough by retail see that really frothy move. It's something that I talked about yesterday in my room with Palantir. That if Palantir did move higher, that the expected move was I think to around $90. But I said that once they clear that level, they're going to go for that kind of psychological pump, and people are going to pile in. And it wouldn't surprise me to see it at 100, which obviously Palantir is at right now. So if the flip side is if AMD reports bad, well, I mean, look at the downside. It's wide open. I mean, really wide open. There is potential that AMD could be trading somewhere between $100 and $90 tomorrow. And again, based on what the markets are pricing, that would be way beyond where they're expecting. But, a bad performing stock with more negative news. I mean, we've seen what it did to a stock like Intel. If you want to have some sort of peer comparison, there's a lot of downside, and there's I think a big, if I'm wrong, there's a big gap fill level, or I can't remember what it was, right around that 90 level that could really draw some attraction for AMD. And they're fighting to stay above that 200. It's that major swing low. They're trying to fight to stay above the 200 SMA on the weekly chart.
The weekly,
But
that's what I'm looking at.
But outside of that, we're looking at that point of control, lower linear regression channel swing low level, and that's just a lot of open space in between. So, what do you think, Mike?
Yeah, looking at the daily chart, you would think, well, there's probably more upside than downside. Looking at performance over the last 2 years, the down moves, there's been more of them. There's been 5 down moves, but we haven't been sitting down here.
Right.
And then the up moves has been kind of nothing, then up 7%, up 13%. But yeah, we're just sitting. We're right now. We're just sitting right at that 200 week moving average, and I'm seeing the swing low 92.90.
Mm-hmm.
That's right in line with what you were looking at. I would imagine that implied vols. I mean, they got to be putting quite a bit into this. Yeah, I mean that thing is jacked.
Yeah,
February 7th is 127 vol, and if you go out 2 weeks, it's 64 vol. So you have some. I'm going to have to take a look at this, and I'm going to have to talk to Scott and see if we want to try and put together some sort of strangle swap, because I could see this going either way, and if it goes, it goes.
Exactly.
To the downside.
It's time for it.
Yeah.
The question is, is the numbers going to be good enough or surprising enough? I think that's a key word, right? They got to kind of surprise the markets with these numbers. I don't know. They need some sort of catalyst. I just don't see it as of now.
No, I mean, the cheaper play would be to the upside, but I mean, it just continues to look bad, and I don't remember coming up with AMD is a screaming buy here. I don't remember saying that over the last 3 months.
Thank God, because all it's done is
you want to, but you just can't say it. So
you're right. Well, the flip side here, Mike, is Google, which is making new all-time highs today.
Yeah.
Obviously kind of on the other spectrum of the AI technology wave, right? And obviously tie with cloud, tie with revenue generation. But what are your thoughts on Google at these levels going into earnings?
Yeah, talk about a flip side. So now you're looking at something, okay, going into earnings, do you want to buy all-time and 52-week highs? it's certainly not bearish. And looking at the performance, kind of the same thing. 4 up, 4 down. The up moves have been bigger than the down moves, and if you're going to jump on, anything with this AI train, it would be Google and Meta. Those have been the ones that are performing well, and Meta keeps going. But this would be one for me that would be just tough to take, just because you're asking so much for them to go blasting above here.
Right.
I would.
That's such a perfect way of explaining it.
And if it goes up, then you just wave them and say, I hope you guys have a nice trip, and pull back. I mean, that 190 level, is, we have a bunch of congestion in there, and we have that swing high going back to July. I'm still looking at this. I'm looking at the weekly chart here. Let's pull up a daily chart and see what we're looking at.
No, you're right though, because the way that the option markets are pricing, it brings it right down to that 50, that 190 level. So
Yeah, that 188. Yeah.
You are correct.
So it's just. I was just saying. I have a really hard time in general, day trading, swing trading, or anything, buying highs and selling lows.
Right.
I would much rather go find something where I actually think some value.
100%.
So I would do something more delta agnostic, delta neutral. If you could do something, it looks like the vols in AMD. Like I said, I haven't even looked at that thing yet. I don't know, front month in Google's jack too. Not as high. Man, this is one that I think that I would rather just kind of sit and have my general bullish tone to it. And if somebody wants to come and sell it to me, well, forget the 50-day moving average. I mean, even pulling back to that 20-day moving average at 196.5, that's not horrible, but that's earnings, right? You just you don't really have a. It's too elevated for me to try and take a breakout. And if I'm wrong, I'm wrong, and then you wave and say good luck.
And this is something that I always talk about in the room. When stocks are at these thresholds, right? Let's say within just a few percent of all-time highs or at all-time highs, the expectations of those earnings reports are going to be extremely high. And if these companies don't provide a glowing report or a strong report, well, that gives investors, Wall Street insiders, a reason to go risk off, because without that perfect report, any kind of chink in the armor could really not scare, but kind of give concerns about how much further froth the stock really has. So
Right.
this is kind of a scenario where it could have a very explosive breakout. What are the reasons why? Well, YouTube ad revenue, which they just started reporting in the last year and a half, comes in extremely strong, especially guidance in that level, which would be contrarian to what Meta's revenue guidance was, which was actually fairly weak in comparison to what they historically provide. Gemini could be a surprise, which I highly doubt, for enterprise services like their Google Suites. I have it. Mike, have you played around with it? We have it.
I have it.
Yeah, I don't play around with it much.
Yeah, and that's true of most of this stuff, like Copilot with Microsoft, and maybe I'm just being old fashioned here. I just haven't gotten that much into it, and I can imagine that if you aren't playing around with it and I'm not playing around with it, then I don't think that most people are.
Right.
I mean, we tend to be a little bit more in tune to technology, and you more so than I am, Mr. Social Media. But yeah, it's just too much to ask. And I hope it comes down so we can buy it, not because I want it to go down.
Exactly.
Yeah,
because obviously
they buy it for a reason, not just because I think it's going up.
And again, Microsoft didn't report that great. which is very similar in relation to, you know, kind of how the corp is designed. I don't know. It wouldn't surprise me if Google is very neutral in terms of price movement. You know, maybe $2 up, $2 down. I think that if they're going to make a very dramatic move, it's more likely down on disappointment. Again, up, they're going to have some sort of really big surprise. They're going to have a really strong report, which is possible. Again, it's Alphabet. You know, anything can happen, but you
Yeah,
know, it's just very difficult at these levels. And I 100% agree with everything you said in that relationship.
because
Folks,
I was
let's
just I'm
go
sorry.
ahead. Go ahead, Mike.
I was just going to say that earnings in general. Remember that the stock market is a leading indicator. So you can have a great last quarter and they can sit there and high five each other and everything, but they say, hang on a second, last quarter was great. We don't expect the same. Remember, these companies are in these earnings, they're asking you to pay more and more for what many people would consider the same company. So if you don't see going forward, why in the world would I go and pay near or at all-time highs for something that is just kind of doing okay? It's doing okay, great. Let it pull back. Everybody take their profit, and we'll buy it from them. So that's, I don't know, just kind of my thing on earnings.
Yeah,
Where
yeah, yeah.
remember, it's
No,
about
totally.
what are you doing for? Not what have you done for me lately. What are you going to do for me tomorrow?
Right. All right, folks, we're going to get into the rapid fire. So now I want us to pop that chat with a few tickers. And while that's going on, we'll get a few of these names listed out there. We're going to present the word of the day. So if you don't have anything for rapid fire, you could just hang out. We got FDX coming up. We have PayPal. Anybody else? Ooh, we got a few. I'll let these kind of soak in so that we could cover a few. We're not going to be able to cover a ton. And I also, folks, would love for you, if you want to get your name on the wheel, right, to get some of that swag, ladies and gentlemen. Today's word of the day is tariff.
Angry tariff.
Boy, hold on. I feel like at least half of these names that are being listed are from the AI room. Why are they coming out in here? We've already covered these. So get that word, tariff, 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 tariff. Yeah, we're not gonna have too much time for the rapid fire. So we got more than enough names. We
Oh, bless.
appreciate it. But Mike, if you are ready to go, we'll start with you first. How about FedEx, FDX? And again,
All
word of
right.
the day is
So,
tariff, people.
so right. And the word of the day is tariff, and that is an app name for something like FedEx. If we're going to see a slowdown in the supply chain, which is very, very possible if any of these tariffs actually happen, and you saw the reaction, on Friday, we were just kind of hanging out there at about 265, and then it came off, and we came off $20. They tested those lows again today. I mean, there is some volume here. Again, we're going to have to zoom out here to the weekly, and we're looking. We got the 200-week moving average at 245, basically. I could see this is all going to go, how the tariffs go. If things in that language and going forward soften, then this is an incredible buy. If we don't see this happening over the, next, let's just call it a few days, a week, if this language isn't softening, I don't see anybody jumping in to get into FedEx. So we have an opportunity because it's a lot lower than it's been, but we have a reason why that's happening. Implied volatility's got to be pretty high here. Let me just jump this up really quick. And actually, this is interesting. The IV percentile, which means basically where implied volatility has been relative to itself over the last 52 weeks, is only 46. That means that 54% of the time implied volatility has been higher than this. Yet here we are sitting down. I mean, we're up on the day, but that's because we closed on the lows yesterday. But implied volatility is not jacked. I assumed it was going to be jacked. It's not. So what does that tell you? Market really doesn't fear a whole lot more of the downside. So maybe it's worth, a call calendar back up into those 260s, 265 level. That's surprising. And that's very telling. Not only surprising, it's very telling that the market's not freaking out. I would have thought that the IVR in this thing would be, in the 65 to 70 range, given the move that we just got, and we're not. So either, and because implied volatility is not high, just selling a put spread or selling some sort of iron condor doesn't make sense because you're selling it less than half of what it typically is. So that says, well, then let's take a long implied volatility play using a call calendar, 260, 265, something like that. Because that's surprising that implied vol is that low.
It's really good that they're also defending that gap bar low, setting up that inside bar because that trigger, there's a little bit of froth just to even get back to that gap bar high
Yeah.
at 258.79, and any push beyond that level, they have that gap fill in the picture. So there's some really good, near term upside targets. And again, getting back to this range, we've seen a lot of demand historically the last two times we were here because we made some pretty good jumps. So that could be it. I guess if it breaks down below that 246.72, we could see that implied vol jack up a bit because obviously it's showing more continuation to the downside. But you're right, Mike. Seeing that implied vol is not that high. Maybe there's a lot of dip buyers and the upside is the play here.
Yeah.
All right. So next up is PayPal, which is getting distrominated today. They initially had a really positive response off of earnings, and they're, they're
Nice.
$16 off of those highs. So where should we look at? Yeah, there's going to be some sort of multi-layered support coming into the picture right around the 76 price. The 200-day moving average is inching up towards that level, linear regression mean, old lows. And we talk about a change. I didn't really see the earnings, so I can't really remark about what changed fundamentally. But this would be probably the range to kind of watch and keep an eye on for the bounce. We're in this zone where there's a really small gap here, but I don't really consider these gap fills. And it's just there's a lot more downside potential, especially with the momentum versus a reason to go risk off for the short sellers and buyers to jump in. So I would say somewhere around 75, 76 should be the watcher here. The RSI still has a little bit of room to go. Hourly RSI is buried. The linear regression channel is trying to hold. Um, I don't know. Again, it's there's several things to say. There could be a reason for the stock to come back. Crypto markets moving up higher. Obviously, financials or fintech tends to do or is percepted to do well under the Trump administration. Value in the short term on a really bullish stock. It's not like PayPal hasn't almost doubled up in price since summer of last year. So
Yeah.
there's a lot of reasons to get in on this, but right now it looks like it's really sellers in control. We're still making new intraday lows here throughout the morning so far.
Yeah. Just
So
no
I just
man's
don't
land.
see
I
a
don't know
run.
what you lean on for a long.
Yeah, exactly. Yeah,
I
100%.
mean, you got that congestion area at 76 half, and then otherwise you're sitting down at 73 three quarters for that 200-day. I'd have to read a little bit more into why it is down so much.
Sellers, Mike.
Yeah.
CRM is next. How about that one for you, Mike? CRM.
Great CRM. All right. Okay. Well, it took back the 50-day moving average after settling up above it yesterday. and it's always hard for me. I particularly, I always love this stock, so keep that in mind. But the fact that it pulled back to the 20-day moving average, got back and settled above the 50-day moving average, tested it today. It's just off of that. That's probably not a bad pullback buy.
Mm-hmm.
At that 50, or if you want to wait for that 20, but I think that if it gets to the 50 and it fails there, then you're probably cooked anyhow
Mm-hmm.
on that secondary move. So an aggressive entry at 39.10 or something like that, and then you would be targeting those recent highs at 367. Yeah, I like it. It's always like we said, in this market, just things change so quickly. But I'm certainly more bullish than bearish.
It's a crazy chart in the
Yeah,
last 2 months.
it's really hard to. You could just make it wide and say, well, I'll buy it down at 313.80 and sell it at 367.09.
Yeah.
You'll never make a trade.
I,
So
I like the breakdown at the 50 here, though. The fact that they got above and they're immediately holding is a really good sign,
it
actually. So
helps.
this is one of those you're playing the pivot level, small risk, looking for the bounce. And if you get it, it's going to be really good rewards. But statistically, the numbers are kind of against you, so it's got to be a real good reward to risk ratio to take. But yeah, Mike is 100% correct. This is a high quality stock. Let's see if they can hold the 50. Sorry, I'm trying to push this before we got to wrap this up. ASTS, folks, made the move that was projected, broke through the 50, got up to the old highs. There's really, if same thing. This chart is a bit like crazy because look at the back and forth, and we're talking about within just a very short time frame. This is typically not the greatest of charts to trade outside of if you're going to trade the extremes, like those
Yeah.
lows and highs. They had struggled at the 50. The question is if they could close above the 50. Close above the 50 and taking out today's highs tomorrow will be a really bullish sign. But that's a lot to anticipate. There is a lot of reasons for buyers to take profit, short sellers to get active. Hence why if it does make that kind of counter behavioral maneuver, we could see a little bit of a short squeeze get manufactured here through 25 half. But I would say it's probably more likely to be risk off here in the near term.
Yeah, man. That chart just makes me sick looking at it.
Yeah, it's literally like
Put on any position that you want, and eventually you'll be right. You just have to not sleep for a week and a half.
Next up is Pinterest for you, which is I don't think much better than what we just looked at.
Yeah, there's another roller coaster. Earnings coming up tomorrow. Is that right?
Mm-hmm. Thursday, maybe
on the 6th. I'm sorry. So Thursday. Again, here we are. We're pushing up against the top of the Donchian channel here, well below the 200. So you're looking at that 34 area. Kind of hard going into earnings and trying to buy stuff on the high end of the range. I would feel a little bit better. Let me see how this thing has been doing on earnings.
last two weren't great.
Last two were, it's a coin flip. The down moves. This thing can move.
Holy cow!
This thing can move, and then it can also not move at all. So that,
so predictable.
Yeah, I would probably be going with something with a bearish tone to it, just because of where we are on the chart. Because you don't got a whole lot to the upside, right? If we break through 34, then you're looking at 34.64 for the 200-day. And then, if things are bad, then we come down to 31. It's not exactly the biggest mover. It's just, again, it's hard for me to take these on the breakout buy to the upside.
Right.
Especially when it has exhibited a distinct possibility that can go down 10, 20% on earnings. So this would be a bearish bias, some sort of iron condor or strangle swap for me, I think.
Okay.
I'd have to actually go look at the numbers, but just looking at the chart.
Okay. Well, folks, as Michael had posted, the wheel is closed. So, everybody,
Lot of names.
good luck. Who's our winner today? It is Francisco.
Francisco.
Please contact Mike. I think he posted info. Prosper Swag at prospertrading.com. So we can get you info and send you some of that swag. I know you brought us in, Mike. You want to take us out? Do you have any final thoughts about the markets or earnings or any of the above?
Let me see what we've done. I had my charts covered up here. We've come back a little bit, right back to where we were after that freak out about somebody canceling a phone call. Yeah, we're just kind of right back into it, and nothing happening with any speed. So let's just keep this volatility going, and if they could just stop tweeting stuff, I think we would have a better shot at things. But it's just stay nimble and don't don't fall in love with anything. Take your profits, respect your risk, because we've seen things just turn on a dime. Really, not necessarily for no reason, but no reason that we know in advance, or at least what we're following news right now.
Yeah, 100%.
And I don't like that, but
no, I
get lucky. That's why we respect our risk.
Exactly. All right, folks. We just want to say thank you for your time. Thanks for tuning in. Tomorrow, our CEO Scott Bauer will be back, but until then, let's go Toros. Viva la Toros. Up only. Maybe down. We'll see who tweets. Take care, everybody.
Thanks a lot, everyone.